It will be a very important week for the Kiwi dollar, with the Reserve Bank of New Zealand expected to cut interest rates for a second time this year. In this video, we'll discuss our current bias for the Kiwi dollar, and we will also explain 3 possible scenarios for this week's RBNZ meeting and how we can prepare and possibly trade them. Hey guys, Arnie here from Forex Source, where we help you to trade and understand the currency markets better. Now on this channel, we do a lot of educational trading content specializing in fundamental analysis. So if you're new here, definitely consider subscribing. Guys, welcome to another week ahead video. This week's video will cover the trading week from the 5th to the 9th of August 2019. We have the RBNZ scheduled to meet on Wednesday for their next monetary policy meeting, at which the markets are widely expecting the central bank to cut interest rates for a second time this year. We also have quarterly employment numbers due for New Zealand on Tuesday, so let's jump into today's video to see how we can prepare and possibly trade these events. Okay guys, now our main focus point for this week is a possible trade on the Kiwi dollar. Now our current fundamental bias for the Kiwi dollar remains bearish. You guys will recall that due to slowing growth and concerns over the global economy, the RBNZ actually cut its OCR or interest rates in May this year for the first time from 2016. Now we've also had recent data points like CPI and GDP that came in on par with market expectations. We had CPI for quarter 2 coming in at 1.7% for the year-over-year number as expected, and we had GDP for quarter 2 coming in slightly better than expected at 2.5% versus expectations of 2.4%. Currently, we have the unemployment rate sitting at 4.2%, but the recent quarterly metric for job growth actually showed a contraction of negative 0.2% versus an expectation of 0.5%, so that'll be a negative point for the RBNZ. Now, there's one particular data point that the RBNZ will be paying very close attention to when they make their assessments this week, and that is the recent RBNZ business outlook, which came in at negative 44.3 last week. Now you guys will remember that the deterioration in the business outlook, this specific metric, was one of the main reasons that the RBNZ gave back in 2018 for their concerns regarding the New Zealand economy. So this will be very important in the assessment this week. Something else to also consider, guys, was reports which came in about 2 weeks back, which suggested that the RBNZ is currently conducting research into unconventional monetary policy. Now this has prompted markets to speculate whether the RBNZ might be considering something like quantitative easing. So we'll need to pay very close attention to any comments about that in this week's meeting from the RBNZ. Now, based on all of the available data, markets continue to expect that the RBNZ will need to ease some more in 2019, and a Reuters poll of 13 analysts show that expectations or probabilities for the RBNZ to cut this week in their meeting on the 7th of August is currently sitting at 92%. And on this point, guys, it's also important to note that there is a growing number of market participants that are expecting the RBNZ will need to cut rates even more after the August cut, with some expecting another cut to happen as early as October or November. So the expectations is definitely skewed to the downside at the moment. Now, there is currently 3 possible scenarios for the RBNZ to play out this week. Scenario 1 is the RBNZ comes out even more dovish than the markets are currently expecting, possibly downgrading the outlook of the economy, confirming that there will need to be more additional rate cuts after this week's rate cut, and also maybe even confirming that they are considering something like unconventional policy like QE. Now, if this happens, this could provide a great opportunity for us to short the Kiwi dollar this week. Scenario 2 is the RBNZ cuts rates as expected, but they change their tone to a more neutral one, downplaying the market's anticipation for those additional cuts in 2019 and rather emphasizing the importance of incoming data and being more data dependent before they consider any additional rate cuts. Now, due to the negativity already priced into the Kiwi dollar at this stage, this scenario might see a big short squeeze and a possible buy the rumor, sell the fact reaction to the rate cut, which could provide us with an opportunity to buy the Kiwi dollar in the very short term. And then scenario 3, guys, is the RBNZ does not cut interest rates this week, and they talk up the economy and the outlook for the economy, and they say that no additional rate cuts would be necessary. and they will never consider something like QE. Now, this would obviously be the most unlikely event for this week to play out. And if that does happen, that would probably result in a very big bullish run in the Kiwi dollar and would provide us with a very sustained opportunity to buy the Kiwi dollar. But that would be the most unlikely event for this week. Okay guys, now that we understand why we're going to be focusing on the Kiwi dollar, we can look at some of the charts and look at some of the technicals. Now, if we see scenario 1 play out where the RBNZ cuts interest rates, but they come out more dovish than the markets are currently expecting, with confirming multiple additional rate cuts in the near future, confirming that they're considering something like QE or other unconventional monetary policy. If this happens, we could look to pair the Kiwi dollar with the yen, which is bullish due to the recent escalations in the US-China trade war. And then if we see scenario 2 play out where the RBNZ cuts interest rates, but they take a more neutral tone and state that further rate cuts would be dependent on incoming data, we could look to pair the NZD with something like the euro, which is fundamentally still bearish as well, and look for a euro NZD short. Now, in the rare event, an unlikely event that scenario 3 plays out as mentioned above, we could also look for a possible euro NZD short. Now, something that should be watched very closely this week with regards to these trade ideas is the risk tone in the market, guys. Further escalation in the trade war will be a negative for the Kiwi dollar and positive for the yen. And if we see a de-escalation in risk and a de-escalation in the trade war, that would have the opposite effect. So keep that in mind. Keep that in the back of your mind going into this week, because that can invalidate both of these trade ideas if the risk sentiment is playing out against any of these trade ideas at the time. So just keep that in mind for this week. Okay, so moving on to the charts and looking at the NZD yen, if we see that first scenario play out with an overly dovish RBNZ and we see pressure coming into the Kiwi dollar, we could look for a short trade on the Kiwi yen. Now, if we draw in our Fibonacci retracement tool from the recent daily swing high, which is close to the 73 handle, to the daily swing low, which is close to that 69.50, we can see that we have two interesting areas on the chart. The first one is this one here with the 38.2 fib as well as that 71 handle. And then we also have this area between the 50 and the 61.8% fib, which has confluence with that 71.50 level, as well as this minor support area. Now, there's also something else I want to show you guys while we're on the daily chart. If we just quickly zoom out, we can see that we also have this previous support area on the daily, which acted as support on multiple occasions, and that level is close to that 72.50 level. So that is also an important level that we can keep in mind for a possible pullback in this pair to these levels. Now, if the pair pulls back into any of these areas, guys, it can provide us with an opportunity to get short on the pair if the RBNZ comes out with that more dovish than expected tone. We can look to place our stop loss just above this recent swing high, daily swing high, which will place it just below that 73.50 level. Now, there's also an important area we need to be mindful of, which is the 69 handle. So if we just go to the weekly time frame and zoom out a bit, you guys can see that this 69 level has actually acted as both support and resistance on multiple occasions on the weekly chart. So whether the pair moves down to this level before it pulls back, or whether it reaches this level after pulling back and then moving back down, we need to be very mindful of this level, and we can expect at least some form of support to come in at this level, given that it is such an important technical level on the chart. Now, if this important level falls this week, guys, there is nothing really stopping this pair in terms of important support areas all the way down to the 59 level. So that is just something very important for us to take note of this week, is that 69 weekly support and resistance level on the NZD yen pair. Okay, then moving on to the Euro NZD. Now, in the case that we get a more neutral RBNZ this week and we see a short squeeze in the Kiwi dollar, we could look for a possible short trade on the Euro NZD. Now, we can see that the pair sold off when it retested this 172 level. This handle, if we just quickly jump to the weekly chart and zoom out, we can see that this level has actually acted as important resistance on multiple occasions on the weekly chart. So that is a very important level for us just to keep in mind. Now, we saw the pair move lower after retesting this area, And following the ECB's previous meeting where they disappointed the market, so to speak, we saw a lot of strength coming into the euro, and we also had that further trade war escalations, which was negative for the Kiwi dollar. And these two factors has actually seen this pair retrace the biggest part of this initial down move. If we just draw in our Fibonacci from the daily swing high to the swing low, the swing high being close to that 173 handle and the swing low being close to that 165. If we draw in that fib, we can see that the pair is currently testing that 61.8 level as well as the 170 flat handle. Now, we'll need to see what the pair does between Monday and Wednesday. Remember, we also have quarterly employment numbers due for New Zealand on Tuesday, so that is something to just keep in mind before you take any positions on the trade. However, if we have either scenario 2 or 3 played out as mentioned above, we could look for either of the Fibonacci levels, whether that is the 38.2, the 50 or the 61.8. We could look to either one of these levels, maybe even a little bit higher, maybe even that 170 handle if the pair does retrace all the way back higher. So if we see that scenario 2 or 3 play out and we have that bullish move on the Kiwi dollar, we could really look to any one of these zones as a possible area to get short in the pair with a stop loss just above the 173 handle, which will place it just above this recent daily swing high. Now, possible places to look for a profit target on this pair, guys, could be this most recent swing just above the 165 handle. Alternatively, if we want to look at a more ambitious target, we could look to something close to this recent swing, which is something just above that 163 handle. All in all, guys, we'll need to wait and see what happens with that RBNZ if we get that that first or that second scenario. And that'll show us which one of these two pairs we could possibly trade this week. Hey guys, question of the day. Is there anything about the fundamentals that you would like to understand better and would like us to make a video about? Let us know in the comments below. And also, if you find our videos helpful, please remember to click that like button, as it really helps YouTube to suggest more of our videos. We hope you guys have a profitable trading week ahead. Until the next video, cheers.